bulls are really trying to fight hard and defend 10,650 for what it's worth. By the way, on a day like today, just look at the excitement on one mid-cap stock, Crompton Consumer, out of nowhere. Suddenly, it's just sort of lights on for this one. Days high and a big spike on Crompton Consumer. So even today, you have these outliers. Of course, they are few and far in between. Sandeep Bagle is with us. Let's get more trading ideas in. Good afternoon, Sandeep. Not an easy day if you're thinking of long trades. What are you going with?
Afternoon, Surbhi. I am going with two short trades. I would want to sell BPCL, that is on the verge of giving a breakdown. Stop loss of 354, target 333. And a sell in a Glenmark Pharma, stop loss 640, target 595.
Okay, Sandeep, thanks a lot for those trading strategies. Just pull out a couple of other stocks. HEG, I think, is an important stock. For long as a lot of people have wanted stock like HEG, perhaps in F&O, HEG and graphite. But, you know, that is the issue with some of these cycles. You don't know when is the top, really. And once it reverses like that. So, why today is important, in fact, it just came off the lower circuit a bit, HEG. So, with today's fall, it's now, you know, less than half of its peak. HEG, I think the peak was somewhere around 4,700. The intraday high was 4,955, but on closing basis it was 4,700. Now down to 2,200. Amrish, any thoughts here? Is this story over, or is this perhaps giving you another entry opportunity for all?
No, like you rightly said, I mean, there are a number of these sectors which move in cycles. And super profitability for any commodity cannot really last too long, unless, of course, you have an IP. And in case of HEG, it was the UHP electrodes. But then, I mean, it's been about 2 years plus, and it was quite natural that you'll soon, start having the supplies coming in from other sources, because clearly with this sort of profitability, it becomes quite viable for a number of other players. So I think when the going is good, people tend to forget that, I mean, all these movement cycles, it could be 1 year, it could be 2 years, it could be 5 years. But then I think the best times seem to be over for both HEG and graphite. And I think it is time that whenever it bounces back, should in fact be utilized by people to book out if they are not already. Because again, this is a stock which had moved from, I think, those 170, 180 levels when I recommended about 2.5 years back. I mean, I also never really expected it to go beyond 500. We saw 4,000.
Yes. Anyway.
2017, I think that was a story. Great year for mid-caps and a spectacular year, I guess, with these stocks.
Yeah, but you know what? With commodities, you know, you buy them when things look really ugly, and you sell them when there's almost a bit of a party going on. There should be absolutely no doubt about it. The exit is most important in commodity stocks, more than entry. I mean, entry you can perhaps get it right. Exit has to be very important. By the way, Sun TV has moved to the high point of the day, 7.5% higher on the stock now. Mr. Ulsan, straight, conclusion that perhaps some money moving from Z to Sun? Because Sun has also underperformed over the last 6 months. It's not as if, it's done really well. It's also a stock which has destroyed a lot of wealth.
See, Anuj, I won't say that the money is moving from Z to Sun, but Sun has its own reason. You are right, in saying that if you take the chart maybe of last 10 days, probably the Sun has corrected by about 30-35%. And if you take these all media companies, they have their value. Sun is the mini Z Enterprise or Z Entertainment, or maybe the company of South, a prominent player. And that is seen, probably the value is seen coming back in the company, because in Z you have a separate reasons for upside and downside both. Maybe for upside is that the promoters are looking to monetize their stake, and downside is that we have this fear of the promoters having lost big money. But in case of Sun, those things are not seen anything now, even the regulatory actions and all those things. So maybe after having realized the value having destroyed, the valuation call is seen coming back in Sun, and I'm seeing this as an isolation case of value buying now seen coming back in Sun TV.
Okay. All right, Mr. Tulsi, and thanks very much for joining us and taking us through all the stock analysis today. That's Sun TV moving higher. Watch out for one more stock. HDFC Standard Life is also one stock that's on the move. But right now, we have Mr. Piramal talking about the performance at Piramal Enterprises. Let's cut across.
Book today is now at 3,920 crores. Shifting gear to the pharmaceutical business, the global pharma business has grown by 14.4% during this quarter. We've successfully cleared 30 regulatory inspections, including one from the US FDA, and 138 customer audits during this 9-month period. Revenue for consumer products has grown in this quarter by 23% over the previous quarter. In our DRG, the Healthcare Insights and Analytics business, our revenue for the 9-month period has grown by 9% to 1,062 crores. So these are the highlights. Because there was a question of liquidity in the last quarter, I thought I'll just share some time with you on this. We continue to maintain a robust liquidity of 5,400 crores in the form of cash and unutilized bank limits. In this quarter, we raised 10,000 crores from NCDs and bank loans and have reduced our CP exposure by 40% compared to September. And we are taking several more measures to improve our liquidity, which includes additional bank lines, NCDs with a longer term tenure, in principle approval for ECB lines, which we shall soon launch, and we are now setting up we've also got a Euro medium term note program. I'll now just want to summarize for you. The details are there in your presentations that we have circulated. That in this quarter, as in the first 9 months, we've delivered a strong revenue and profitability performance with growth across both financial services and pharma. Our loan book in pharma has grown by 45% year on year to 55,000 crores in a very volatile industry environment. Our housing finance book has also grown by 69% quarter on quarter to 3,900 crores. We've raised 10,000 crores, as I said before. Commercial borrowings, paper borrowings are lower, and our ROE is 19.4%, and NPA ratio is at 0.5, the gross NPA. Pharma, global pharma revenues grew by 14.4%. We cleared 30 regulatory inspections. Consumer products have grown by 23%, and healthcare insights and analytics by 9%. So these are the highlights which I thought I'll share with you. If you have any questions on the quarter's performance, 9 months performance, I'm very happy to answer that.
Hi, Mr. Piramal. Just a few questions on first the numbers. 102.8 crore rupees is the other income. If you can give details on that. And your EBITDA margins have seen a substantial rise on a YOY basis, 58.15%. If you can give us a breakup on the uptick of the margins as well.
So the other income is really on the basis of what the Shriram Group, our investments in Shriram Group are, the investments in Allergana. That's what the income is. And the margins have gone up because in this quarter, our PCC or the critical care products, their growth has been higher than what it was in the previous quarters. And those are more high margin products that have been sold. And that's why the margin is higher.
So in pharma, if we can just deliberate a little bit on that, even if your global business has done well and taken the lead, it's a subdued quarter as far as the consumer product business is concerned. The growth has been flat, and on the healthcare analytics, it is in single digits as far as growth is concerned. Can you give us some more details on that?
So as far as the global pharma is concerned, as I said, the critical care business has grown well in this quarter, and it is therefore the margins are better. The growth rates have come from that. As far as consumer products is concerned, Actually, if you see, there were some issues compared to the same period last year. One is that we had the ban for a short period on Saradon. Now we've got that stay from the Supreme Court. We've also launched a new product called Saradon Plus, and Saradon is about half of our sales, so that was affected.
Okay, that's Piramal, of course, a bit of pharma, a lot of NBFC, some real estate. It's a lot of businesses. Numbers were good. Today, the market's worried about perhaps the liquidity issue on NBFCs, and that's why you saw that stock intraday down about 7-8%, but has recovered. Mr. Piramal was making the point about the liquidity situation as well, that is quite okay at Piramal, but for now, still down about 4.7%. We'll take a break. Up next, we'll have the BTST calls from our technical experts. Well, that recovery is being sold into, and just pull out Yes Bank because that is now down about almost 6% as a stock, and I think talking about it, even on Friday, it had given that indication that perhaps that one-day move was essentially just about short covering, and since then on, it's been a downward journey. Even on Friday, technically the stock was in the red. The green tick was because of the averaging issue. But anyway, that's a stock which is now down 5.5%. And from the highs of 230, 235, it slipped now to 207. Ashwini and Prakash with us with the BTST calls. Ashwini, you go first. That perhaps that contract long didn't actually work because the market's back to the low point. Is it giving an indication of fresh breakdown? And what are the stock calls now?
Everything may not work immediately, particularly a market that sold off so sharply. It'll take some time to get confidence back, etc. But buying at 10,650 is probably better than buying at 10,950. So that way, nothing keeps going in the same direction. Otherwise, in 3 days, this entire game will be over. So my sense is that this is a good time to take that contra trend risk. Maybe keep a stop of about 10,600 thereabouts. Bank Nifty is at a support. Nifty is fairly close to supports. So that way it takes one news or 1 hour for a market to construct a pullback. Having said that, I think UPL is a buy with a stop of 750. Target of 775. TCS is a buy with a stop of 1930, target of 1980. Bharti Infratel is a buy with a stop of 280, target of 305.
Okay, those are calls that Ashwini is going with. Prakash, what would you do in the last 20 minutes?
I'll go short. 2 stocks for tomorrow. Diwan Housing Finance looks weak, can see a slide to 175, stop above 195. Tata Chemical is another stock that looks weak. 650 is possible, stop above 675. I have a feeling that market could also open the gap up tomorrow morning and continue going up. But so far it looks weak.
All right, fair enough. Those are some BTST calls. Canara Bank has reported loan growth at 11.8%, the slowest in 3 quarters. However, asset quality has improved. To discuss more, PV Bharati, Executive Director of Canara Bank, is with us. Ms. Bharati, good morning. Good afternoon. Thanks a lot for joining us. I first want to discuss
good afternoon.
The loan growth issue. 11.8%, slowest pace. Was it a conscious decision, or is this the kind of situation that you're seeing right now where there's genuine struggle for in terms of generating loan growth?
No, there has been we have been growing very regularly. We have not come restrained from any particular sector. The bank, for quite some time now, we have focused on retail segment, RAM segment. So the retail assets and agriculture and MSME, if you put these together, we have grown by nearly 25%. So the growth only in the corporate sector has been around 7%. Now this has been a conscious decision, keeping in tune with the fact that there is no much of uptake in the corporate segment. The overall loan, we have not restricted on any particular sector, but we have got a very adequate risk management systems in place, and we have been strictly adhering to the prudential limits that have been fixed in the initial beginning of the year. And because from 2015 to 2018, if you see, 2015 we were at 60% corporate and 40 retail. Now we have just changed the proportion to 40% corporate and 60% retail. So this is in tune with the projections which the bank has got for its March 2019. So the double-digit growth is continuing in all the segments of advances.
Okay. So, ma'am,
the housing loan sector, if you see, it is 20%. Yeah.
Okay. No, ma'am, okay, we get your point that this is conscious slowdown in the corporate book because you want to change the mix and make it more retail-oriented. Let me just try and get some more color on asset quality because at the GNPA level, the numbers have improved, 10.25%. Where do slippages stand in the third quarter, ma'am? If you could give us some more granular details.
See, if you, the overall recovery, reduction in the NPA ratio, if you see, we have followed a very good system of attacking each and every segment. That's why I mentioned that even right from the written off accounts, the default and loss accounts, as well as the small value accounts and the large value accounts. As all of us are aware, the NCLT accounts, we had 12 accounts in the first list, out of which 2 have been resolved, and we have 10 accounts with an exposure of around 8,800 crores. We have in the second list of 30 accounts, we have 16 accounts. We had 17, of which 1 got resolved. So we have 16 accounts, and we have made enough provisions for both of them. Apart from this, since we are a retail bank, like we said, we are 60% retail. We have ensured that our housing loan NPA is less than 1%. We have been focusing on agriculture and MSME NPA also. So because of this overall approach in all the segments of the asset quality, we have been able to ensure that we bring down our gross NPA to 10.5%, 10.25%. It was earlier 10.54 in September. Now it has come down to 10.25. And another thing is we have been ensuring the slippages. Actually, we had targeted only a slippage of 2,400 for this quarter. So we have been able to maintain it. The additional surprises only came from ILFS and the fluctuation in the foreign currency, which has gone to nearly 400 crores. We had to provide additional for that. So this 1,700 to 2,000 crores was actually additional, which has shown us a slippage of around 5,000 crores during this quarter. So it has been, and also we have developed apps, for monitoring and recovery of the field. Up to the last person in the branch will be able to track his NPA accounts, will be able to visit and follow up for the recovery. And we have introduced the OTS system, which has been suggested in the PSB reforms agenda also. So this focused attention has helped us to reduce the gross NPA as well as the net NPA.
All right, Ms. Bharti, thanks a lot for your time today. We have run out of time, otherwise would have loved to ask you some more questions. We'll do that some other day. Amrish, very quick thought on Canara Bank, down 5.5% right now.
No, I think after this correction, if we see possibly either 10-15 rupees more of a correction, say at levels of about 225, I think, that's been a good support for Canara Bank for a while. So I think one should look at buying at those levels.
Okay, that's Canara Bank. Just one more question. Another bank, ICICI Bank. Now you're getting it 10% off the peak. Would you buy it?
If this has come down basically because of the market overall fears as well as the issue of Chanda Kochar, then I think one should be looking at buying. Maybe over the next 3 or 4 days, may not be today. But then I think this bank is clearly in the recovery mode, and this correction I think is a good opportunity to buy.
All right, Amrish, thanks a lot for joining us today. It was good talking to you. We have Nimesh Chandan now joining us, Head of Investments and Equities at Canara Robeco Mutual Fund. Nimesh, hi, good afternoon. Thanks for joining us.
Good afternoon.
Your thoughts on what's going on in the broader market and what's led to this mood change all of a sudden? We are a market which has underperformed the most, and in the broader market there's quite a bit of pain.
So it's very difficult to really put fundamental reasons for day-to-day movements, but I would say it's part of a cycle. In 2017, the markets did extremely well, and especially the mid-cap and the small-cap category. And the Nifty went up by more than 35%, but we were still performing with the other emerging markets. Last year, though we went up only by about 4 to 5% in Nifty in 2018, but we were a handsome outperformer compared to the other emerging markets. It's only in the last 1 month that we have seen some kind of a sell-off or some kind of a correction. We've also seen historically, as part of the cycle, certain excesses get created during bull markets. When things are favorable, people project the same to be continuing to go for longer, and the valuations go up. And then with some disappointment, there is a correction triggered. We believe such kind of markets where people are today a little more risk aware are opportunities, and investors should use this volatility to increase exposure in the equity markets.
The question is, Nimesh, good afternoon, Surabhi here. The question is where to deploy that money. That's what people are asking, because you're getting now, mid caps at very attractive valuations, but with a lot of question marks. So, let's say when you're talking about your diversified equity fund, would you sort of, look at more of a large cap exposure at this juncture, looking at the next 6 to 12 months?
So, Surabhi, you are right. There are a lot of question marks, but attractive valuations come all the time when there are more question marks. When people are risk aware and they price risk, it's when opportunities come. When people throw caution to the wind, there is generally euphoria and valuations don't come attractively. To specifically answer your questions on mid and small cap, now the small cap category has corrected by 30% last year. The index has corrected by 30% last year. And it's a very diverse category. No single sector is really dominant in this category. So when a large diverse set of companies, they correct by an average 30%, the odds come in your favor for picking up good companies at a reasonable valuations. Now, nobody can exactly predict the bottom. You only know in the hindsight that that previous level was the bottom because the market never went below that. But you can always see value. Today, there are a lot of companies that have come into a kind of a value zone, which are good for investors to look at. For across our funds, for example, we have increased our allocations. We are more positive on mid and small cap. Thematically, we are more positive on the banking sector and especially the corporate banks in this area. So these are pockets of opportunity that we see in the current market. The valuations too on a broader market are not very expensive. So I don't see euphoria or too much optimism or people rushing to put in money. The Nifty is at a forward valuation of about 16.5, and on a price to basis it will be a little lower than 2.5 times, which has been the historical average. So I think over past 1 year, with the earnings growing and markets being a little more muted, the valuations have corrected in many pockets.
Okay. By the way, just want to point out, Z is at the high point now, almost 18% move on the stock now, and ICICI Bank is recovering a bit from the low point, which is interesting because ICICI Bank is recovering, though it's not having an impact on the bank Nifty because HDFC Bank and Yes Bank have now moved to the low point of the day. So that's quite interesting right now. Nimesh, I see you have exposure to Maruti in your fund. I'm not asking whether you're doubling up on your investment, but your thoughts on what's going on here. Is this a temporary issue or is this some serious derating now?
So I won't be able to comment on a particular stock or a company, but generally the auto sector has seen some kind of a slowdown. And there have been various reasons for the last quarter slowdown. There was issue of inventory. We've seen in the beginning of the last quarter some increase in oil prices impacting the changes in insurance norms. And also, to some extent, the liquidity issues and the NBFCs have also impacted sales process. Typically, when such a slowdown comes in, you also see some pressures on companies' margins. But again, if you see in the last 15 years, the automobile industry in India, both two-wheelers and passenger vehicles, have seen cycles where growth rates in some years have been as high as 20% plus, and in some years we have seen a more muted kind of low single-digit kind of growth. Maybe this will end up as one of those years where the growth is a bit muted. Going forward, however, the auto sector as a structural story would continue. We will see higher penetration of autos in the country. Once we see liquidity back and interest rates a little more benign, the demand side will also improve.
Okay, so remain structurally positive on the auto space. All right, we'll have to wind it up a little short on time. Thanks very much for joining us on the show today.